What's up, everybody? Welcome back to another video. My name is Nour Trades, and I'm known for turning $20,000 into a little over $4 million. So today we had a few big trades. We also had some weird market sell-off happening midday. They didn't know what caused it. They said that there was I had left the desk when this happened, but there was a WHO meeting. They were talking about the coronavirus, but that didn't trigger the sell-off, and the sell-off ended up happening midday. Obviously, a lot of things are going on, and maybe investors are too scared to hold during times like this. So it ends up being who's going to sell first type thing. So as you can see, the sell off on my screen. This is SPY, which is the ETF for the S&P 500, and you can see this major sell off like throughout the beginning of the day. You had a calm uptrend. It was still pretty volatile. You see these big candles broke out of consolidation, pullback, broke. Pullbacks, but then you get this extreme pullback, and on SPY it may not look like a lot, but this is a lot for an ETF pulling back. That's from 338 all the way down to 333.68. But besides that, the market ended up recovering throughout the day. As you can see from the low it created, it started recovering and ended up Dow only ended up negative 128 points. At one point it was negative 350 points. So it wasn't as bad as it may had looked midday. Probably, I think the bottom was 1134, as you can see at the top. So what I'm going to be talking about today is Stmp. So Stmp just had earnings last night. They did a really good job, and as you can see, this stock popped. So last night, stock went from 95 all the way up to 130, which is a big pop. I would say that, what is that, like $35? And then this morning, consolidated, waited for the consolidation to break. As soon as it broke, I got in, and this stock pushed. The spread on these contracts were insanely big, so I didn't want to get too aggressive because, it just didn't make sense. And also with spreads that big, you can end up getting caught in a bad trade. You can end up getting caught badly in a good setup. So it could be a good setup, but as soon as you get into an enormous spread where the top of the spread, the ask is 620, and you see the bid at, I think at one point it was like 4. So it was a really big spread. Ended up working in our favor because the stock was pushing. We got into the stock. But what made me look at Stamps today, right? Obviously, they had earnings. I always like to look at stocks that just had earnings, especially major moves, because it allows us to make a lot more money with options. And today, I didn't really like the options, so I basically played with shares. So it was half and half. As you can see, my profits for the day is $8,673. So what we're going to do is we're going to look at the 1-year chart, and you'll see what I'm talking about. So you can see this stock right here. I'm going to zoom in so that you guys can see everything here. This stock had earnings. The date here was January 21st, 2019. So basically a year and maybe 2 weeks ago. This stock had earnings, and this stock crashed pretty badly. So as you can see, the stock fell from $194 all the way down to $86. So if you do the math there, that's almost 100. Actually, it's over $100. That's $104. So $104 on a drop overnight due to earnings. So that's a very big drop. And what that does is it creates a gap for a stock. So these gaps end up happening. There's different types of gaps. There's continuation gaps, breakaway gaps. There's 4 different types of gaps, right? And this type of gap was due to earnings. Obviously, when stocks have earnings, they can end up making a gap. So Roku just had earnings. You'll see Roku has any stock has gaps, right? But the thing with gaps is gaps almost always get filled. What does that mean, right? What that means is if a stock creates a gap, it has to get filled. Does that mean it has to get filled the next day? No. Does it mean it has to get filled this week? No. Does it mean it has to get filled this year? No. Right? So let me show you an example. Look at Roku on a breakaway to the top. This is a breakaway gap here for Roku. And you can see this goes from 101 all the way up to 118. It ends up filling this gap to the downside. So it created a push all the way to 176, but it came down and filled the gap. What does that mean? It filled this little space right here. Look, stock went from here all the way down to 101 and then came back. So that's a gap being filled when I say gap being filled. So now if you go to STMP, what we played today, this gap needed to be filled. So what you do is you look at the gap where it drops. So it's usually from where it dropped, where the space ends and starts. So it started right here and ended right here. What I did was I counted, instead of this little candle right here, I used this. I used the $99 range. As soon as that $99 range is broken for Stamp, that initiates the start of a fill to a gap, right? So what it does is this created a gap overnight as well. So this could have went to the downside and filled this gap and then came back. So I said this morning when it pushed up to 130, this has room all the way to 190 because it has a gap to be filled, right? So this is going to push to 190. It's filling a gap that it created 1 year ago, and this is still going to push. So as you can see today, this has room to 190. Does that mean it has to do it this week? No, it doesn't. It could end up doing it. It could end up finishing this in the next year. But what are the chances it does finish this soon? There's pretty high chances just due to the amount of push it's been getting. So it pushed from 130 at open all the way up to 160. So tomorrow, if it breaks 160, you're probably going to get a higher and a bigger push to maybe 170, 180. There's no exact point, especially when the stock is making, these highs recently. Obviously, you can look at the 3-year chart and go more in depth. But the gap that it created a year ago is on its way to being filled. And that was my, initiation to looking at this stock this morning. So as soon as it broke, and also it was consolidating. Another reason that I got into the stock this morning was, 1, the gap, and 2, there was a consolidation. As you can see this morning, the stock stayed in a really tight gap. You can see wicks. The candle stayed in between 132 and really, honestly, obviously these two candles, but other than these two candles, it stayed between 132 and 128 and played in that gap. As soon as it broke that 133 level, 134, I got in on that 134 because I was looking at the wick, so I didn't want to get in too early. So what I did is I was like, all right, the wick is 134. I'll get in on the confirmation that it breaks the wick. So it broke the wick. I got in on this candle. It pushed. The spread was so big, and I have a chat. So I had to make sure that we got out the stock safely, and I didn't want to stay in too long. So we got out pretty quickly on the push up, but we made a good amount of money off of Stamp. The contracts were insane. They finished the day at $2,470. I got filled this morning for $6.09, which is $609, and it ended up finishing the day at $2,470, which is a pretty insane move today. So a lot of people got 100% profit off that. I also had SPCE breaking new highs. Got in with shares. That's a little play. Roku, I got in on the sell-off. Pretty big play here. Let's look at Roku. Roku broke support on the sell-off. I don't like catching things on a falling knife, right? What I do is when things are a falling knife, which means it's going straight down, I don't like to catch it, especially if it just broke support. I'll just be like, all right, even if it keeps going, I'm not going to worry about it. I'm not making a mistake on chasing it. I'm going to let this rebound. If it rebounds and then creates a new low, which it did right here, I got in on this candle at the 123.40. As soon as that breaks, then I'll get in. So I got in, scalped this. I'm very light. I was very light because I wasn't at the desk while trading and I didn't catch the sell-off. So I wasn't at the desk on the sell-off. So I was at the gym, or I don't even know where I was at. Oh, I was eating. So I was on my phone. I went very lightly, made $878. And then same thing with Tesla. I caught that on the sell-off as well. I always have my supports set up. So as you can see, this broke support, and this just kept pushing down, 887. So what I did with Tesla today, I'm not going to lie, I went in extremely light and caught the falling knife, but in this case, it did work in my favor. So this did push from 887 all the way down to my next support at 872. As you can see, it bounced right off and then kept pushing down. And then finally, you can see the wick right on my support pushed all the way back up. So that's my plays for today. That's how I made $8,673. I think this week it's currently Thursday. Actually, it's Friday. I'm making this video very late. But it's really up to Thursday. I'm up like 19,000, 20,000 for this week. Tomorrow I'm hoping that we can finish this strong week. So these are my biggest plays. That is why I got into Stamp. It's a gap fill. I hope I educated you on what that really means and what I was looking for on that trade and why I made so much money. So if you guys enjoyed that video, make sure you hit that like button. Comment down below on what type of videos you want from me. And if you want any more information about me, check the description. I always post my trades every single day, wins or losses. I post my brokerage statements, and I post my cost basis. So any more information is in the description. So I appreciate you guys joining this YouTube video. I'll see you guys. Peace.